That approved screen is not the finish line. Your coffee may already be in your hand, while the payment system is still working behind the scenes. Imagine a $5 coffee at a busy cafe. It looks like one small purchase. From your side, it feels simple. Tap, approved, receipt done. Behind the counter, that same moment starts messages, risk checks, records, and settlement work. The whole story becomes easier once you separate 3 stages: authorization, clearing, and settlement. Read the diagram from left to right. Authorization checks permission, clearing organizes records, and settlement moves funds. The exact details can vary by country, card type, merchant agreement, processor, and network rules, but this model is enough for the core idea. A single card purchase can involve several players that most customers never think about. There is the cardholder, which is the person using the credit card to make the purchase. There is the merchant, which is the cafe, store, website, or business accepting the payment. There may be a payment processor that helps route transaction messages and connect the merchant to the payment system. There is the merchant's acquirer, which provides card acceptance services on the merchant side. There is the card network, which helps route messages between the merchant side and the cardholder's bank side. And there is the issuing bank, which issued the credit card to the cardholder. The first major step is authorization, and authorization is basically a permission check. The merchant's payment system sends an authorization request through the card payment network. That request is asking whether this card can be used for this purchase, at this merchant, for this amount. The issuing bank checks whether the account is active, whether the card appears valid, and whether enough available credit exists. The system may also evaluate risk signals, because a card can have credit available and still look suspicious. If the request is approved, an approval message travels back through the network to the merchant. That is why the terminal can say approved in just a few seconds. In many cases, authorization creates a temporary hold that can reduce the cardholder's available credit. That is why a banking app may show a pending charge before the transaction is fully completed. You may notice this more with hotels, gas stations, restaurants, or rental cars, where a temporary hold and the final charge can differ. If an authorization is not needed anymore, an authorization reversal may release the hold before settlement. That is different from a refund, because a refund happens after a transaction has already been settled. So approved usually means the purchase was authorized, not that every record and fund movement is already complete. After authorization comes clearing, where transaction details are exchanged and prepared for posting and reconciliation. The system needs records for the amount, merchant, date, institutions involved, and the transaction identifiers that connect everything. In many payment environments, transactions are not treated as isolated little events forever. They can be gathered, submitted, and processed in batches. A merchant may close a batch at the end of the day, so the day's approved transactions can move forward. Clearing helps the different sides agree on the transaction details that will be posted to accounts. Without clearing, the system might know a purchase was approved, but not have all the details needed to finish the accounting cleanly. Then comes settlement, which is the part where funds are moved between financial institutions. Instead of every purchase being a separate cash movement, payment systems can calculate what each side owes overall. The issuing side and the acquiring side settle what is owed according to the payment network's process and the relevant agreements. The merchant may receive the transaction amount minus fees, usually through the merchant's payment relationship. This is why the approval message at the counter is not the same thing as cash landing in the merchant's account. Card acceptance is convenient, but the merchant often pays fees for the services that make that convenience possible. One important concept is the merchant discount, which is the amount deducted from the transaction value before the merchant receives the net amount. People often mention interchange fees, but it is safer to say merchants usually pay their financial institution a merchant discount. The exact fee structure can depend on the merchant agreement, card type, network, country, fraud risk, and transaction details. Even with fees, Many businesses accept cards because customers expect them and because card payments can increase conversion. If the issuer declines the request, the merchant does not receive the same approval path, and the sale may need another payment method. A decline could be caused by insufficient available credit, an inactive card, suspected fraud, network issues, or issuer rules. Online payments can look different on the surface, but they still rely on authorization messages, records, and settlement. Subscription billing uses the same basic ideas, but the merchant initiates future charges according to the customer's agreement. A later dispute or chargeback is a different process, where a cardholder challenges a transaction after it has moved through the system. This video is not covering every dispute rule, debit rule, prepaid card, cross-border fee, or processor contract. When an approval comes back, the merchant may receive an authorization code. That code helps identify the approved request, but it is still not final settlement. For the merchant, approval is a green light to complete the sale. It is not a promise that every later record and payout step has already finished. Authorization can be fast because the system is sending standardized messages. It is checking permission, not moving the full economic result in real time. After authorization, the merchant may capture or submit the approved transaction so it can move into the later clearing and settlement process. In some industries, the amount that was authorized and the amount that finally posts can differ. Tips, fuel holds, and hotel deposits make this easier to notice. That is why a pending charge in your card app can later become a posted charge, disappear, or be replaced by a different final amount. Now multiply that $5 coffee by millions of transactions. Payment networks and financial institutions are constantly organizing records at massive scale. The card network is not just a simple wire. It provides rules, message formats, routing, clearing processes, and settlement processes for participants. The customer is not directly wiring money to the store at the terminal. The payment moves through relationships between institutions and service providers. The timing of the merchant's payout can depend on the processor, acquirer, merchant agreement, risk controls, weekend timing, and settlement schedule. The customer sees the gross price. The merchant may later see a net deposit after card acceptance fees and other processing costs are deducted. Those fees help support authorization, routing, fraud controls, record exchange, settlement access, customer support, and dispute infrastructure. The useful mental model is to ask which stage you are looking at. Is it authorized, cleared, settled, posted, reversed, or disputed? The recap is simple. Authorization checks whether the payment can be approved for that card, merchant, and amount. Clearing exchanges and organizes the transaction details so the sides can post and reconcile the transaction. Settlement moves funds between financial institutions and helps determine the net amount that reaches the merchant side. So a credit card payment is not really one event. It is one customer moment hiding a payment chain. To the customer, it feels instant because the system is designed to hide the complexity at the point of sale. For the business, every swipe depends on infrastructure, contracts, fees, risk checks, and financial institutions working together. That is why a $5 coffee can reveal one of the most important hidden business systems in daily life. This is hidden business systems, simple explanations of the systems most people use every day but rarely see.